Thank you, Dr. Glickman, and thank you to all of the participants. I'm grateful to have this opportunity tonight to share with all of you some of the highlights about the school district's finances. So without any further ado, Chris, next slide, please. First, let's take a quick look at the agenda for this session. In the presentation tonight, we're going to focus on 4 key areas. The first one being the district's financial position. Secondly, the sources of revenue. Next, how are these funds spent? And then we'll take a look at what lies on the horizon that may impact district finances. Next slide, please. Before we dig in, I want to give you a little bit of background on terminology and data sources. We're going to be looking at a lot of data tonight. The graphs and charts come from a tool called 5Sight, and those tools pull data from the Illinois State Board of Education sources. So the financial data comes from the annual financial report, which is filed with the Illinois State Board of Education. The staffing data comes from ISB's EIS, or Employee Information System, and student enrollment comes from SIS, the Student Information System. As for terminology, when we talk about the school district's budget, we often talk about it in its entirety, as if there was one overall budget, when actually the district is responsible for accounting for the financial transactions in 9 separate unique funds, each with a unique purpose. When we study financial information, at times we focus on the operating funds, which includes those funds, we aggregate those funds where the financial transactions for day-to-day instruction and operations are recorded and are listed in the column on the left on this slide. Next, we often ask, how do our metrics compare to our peers, to our neighboring school districts? How are we doing? We have chosen a group of Lake County elementary school districts to build a peer group to which we can compare our metrics to see where are we similar and where might we be different. Next slide, please. Let's start with the big picture and take a look at the district's financial position. Next slide. On this first chart, we take a look at the district's financial profile score and designation over the last 5 years. The ISB Financial Profile Score and Designation is a tool developed to measure financial strength of school districts in Illinois. The ISB uses the school district financial profile to help monitor finances of school districts and identify which districts are in or moving toward financial difficulty. The profile is generated from the district's annual financial report and includes 5 measures: fund balance to revenue ratio, expenditure to revenue ratio, days cash on hand, and then percent of short and long-term debt remaining. The 5 indicators are individually scored and then weighted in order to arrive at a total profile score and applicable designation. The first 2 measures, the fund balance to revenue ratio and the expenditure to revenue ratio, are the most important measures because when weighted, they account for 70% of the score. In 4 of the most recent 5 years, the district has earned the highest designation possible, financial recognition. On this chart, on this slide, the dark green boxes represent the categories where we have scored a 4. 4 is the maximum points allowable in each category. And the lighter green represents the category where we've scored a 3. In 2020, the district received the maximum score available, a 4, in 3 areas: the fund balance to revenue ratio, expenditures to revenue ratio, and the percent of short-term debt remaining. The lowest score received was a 1 in the percent of long-term debt remaining. Next slide, please. So let's take a closer look at the first measure, the fund balance to revenue ratio. As you know, the school district collects property taxes twice per year. the first payment due June 1st and the second payment due September 1st. To use an example, imagine in your family budget, you only received 2 paychecks per year. You were paid twice per year on this same cycle. What would you do? How would you manage your family budget? If you think about that, you would most likely set aside money between paychecks to cover your expenses, groceries, gasoline, utilities, etc., to cover those months in which you are not receiving another paycheck, in which you're not paid. While school districts follow a similar approach and hold funds in reserve between these property tax collections so that we can continue to pay our teachers, pay our salaries, and pay our bills, pay our vendors. It's the fiscal responsibility of the district to maintain fund balances adequate to ensure the district's ability to maintain appropriate instruction and operational services and to pay our vendors in a prompt manner in spite of any unforeseen events or unexpected expenses. The Illinois State Board of Education suggests that the June 30th fiscal year ending fund balance ratio to revenue be 25%, that's an appropriate target. CCSD 46 Board of Ed policy specifies the district seeks to maintain a year-end fund balance to revenue ratio of no less than 25 to 30%. On this chart, the left axis shows the fund balance dollars, stated in dollars, to be about $20 million, and the fund balance revenue ratio runs between 38 and 40%. That's designated by the orange line or yellow line. And so you can see that the district is being financially responsible, is setting aside an appropriate level of reserves in alignment with board policy, as well as the recommended target indicated by the Illinois State Board of Education. Next slide, please. When we compare the CCSD 46 fund balance ratio to revenue to the set of peer districts, we can see that the ratio for this set of peers is represented by that gray line across the middle of the bars, and it's at about 57%. The district's ratio was 38% for fiscal year ending 2020. So we are not quite in the middle. We are below that average, but again, we have achieved a ratio that is above and beyond what the state recommends and what board policy specifies. Next slide, please. Again, connecting to the financial profile model, the second most important measure is in the financial profile is the expenditure to revenue ratio. We can ask ourselves, are we living within our means? Board policy indicates that we strive for a balanced budget every year, meaning expenditures equal revenue dollar for dollar. In years where expenditures are less than revenue, we add to reserves. Conversely, in years where we spend more than we take in, we draw down from reserves. When we look at the history across this 5-year time period, we can see that expenditures are less than revenue in 4 of the 5 years. As a result, the surplus as a result of operations was $420,000 in fiscal year 2016 and $1 million roughly in both years 2019 and 2020. Next slide, please. This slide represents another way to look at district's history for the balanced budget. We can see, again, a surplus was generated in 4 of the 5 last years, with a small deficit in 2017 of $220,000. Next slide, please. And the third measure is the days cash on hand. This indicator provides a projected estimate of the number of days a district could meet operating expenses, provided no additional revenues were received. The district's cash position relative to anticipated expenditures has been pretty level in years 2016 through 2019. The decline in the current 2021 budget year is reflective of the current year budgeted deficit, driven primarily by contingency funds budgeted for the uncertainties related to the response to the pandemic and COVID. Next slide, please. Next, we'll look at the district's funding mechanisms and address the question, how do we pay for instruction and operating services? Next slide, please. Where does our revenue come from? Education in Illinois is funded from a combination of local, state, and federal sources. The pie chart shows the breakdown where the green represents funding from property taxes. In fiscal year 2020, property taxes received from residential and commercial property owners provided 60% of the district's revenue. The orange slice shows the state of Illinois provided 28% of district revenue through the evidence-based funding formula. We'll dive into the evidence-based funding formula in the next couple slides. And the remaining 10% of revenue is provided by a combination of other local, other state, and federal revenue. Next slide, please. This bar chart shows us how revenue by source has trended over the most recent 5 years. The red portion of the bar represents property tax collections, and it has increased slightly over time. We know the property tax formula allows for an annual increase, and that rate of increase is capped at the rate of inflation. The green portion of the bar represents revenue provided by the state of Illinois. If you look closely at fiscal year 2018, you will see the increase in state revenue, which is due to the initiation of the evidence-based funding formula, which replaced the former general state aid formula. Next slide, please. How have tax rates trended? This chart shows the district's tax rate over the most recent 5 levy years. You can see tax rates have dropped by 1 percentage point from 6.2% in the 2015 levy year to 5.2% in the 2019 levy year. We have not yet received the levy extension from the Lake County clerk yet. Soon. The tax rates are declining due to the growth in the equalized assessed valuation, or commonly referred to as EAV. Next slide, please. How much money do we receive from evidence-based funding formula? So we're going to shift, take a look at state revenue and take a look at the state's primary funding tool, the evidence-based funding formula. In August 2017, Governor Rauner signed into law the evidence-based funding formula, replacing the general state aid, special ed personnel, and bilingual funding formulas. The EBF formula is predicated on several calculations. First, a unique adequacy target is calculated for each individual school district in the state and is based on each individual school district's student population, the district's unique student demographics. The adequacy target is then compared with funds provided by local resources. The school districts whose local funds provide a level of funding that is furthest from the adequacy target receive the greatest amount of additional support from the state of Illinois. The overall goal is to move all districts closer to adequacy. In fiscal years when the state legislature appropriates additional funds or new money for EBF, those districts further from adequacy receive a larger portion of that new money. In fiscal year 2020, meaning last year, the district received $13.5 million in EBF, of which $1 million was from new money or this additional appropriation. The state legislature was not able to appropriate any new money for this fiscal year, and it appears the governor's budget does not allow for any additional new money for next year either. We do need to wait. Statutorily, the state legislature needs to authorize a budget by May 31st. So we watch that with great anticipation. So when we look at this chart shows us in the gray area, the lower portion of the blue bars, that the district's percent of adequacy is roughly 64%. When the percent of adequacy is below 67%, the district is classified as a Tier 1 district. A Tier 1 district is where that lack of local resources puts us further from the adequacy target, and we're eligible to receive more state assistance when it is appropriated. Next slide, please. How do we compare to our peer districts? When we look at our peers, we see that District 46 is one of 5 Tier 1 districts. There are 3 two-tier districts, 1 Tier 3, and 1 Tier 4 in this group. So this gives you a perspective about the range of local resources available to other school districts also in Lake County. Next slide, please. Now that we've looked at the revenue sources for the school districts, we're going to take a look at the expenditure priorities. How do we spend these funds? Next slide, please. In school district accounting, expenses are categorized in specific ways. When accounting for expenditures, we follow the classifications specified in the Illinois Program Accounting Manual, as all school districts do within the state. On this slide, the left-hand pie chart represents the portion of expenditures invested by the school district in each of these categories. The pie chart on the right represents the state of Illinois in total. The slice of the pie, the biggest slice of the pie in gray, represents money spent on salaries. The red slice of the pie represents money spent on benefits, and the blue represents money spent on purchase services, and orange is titled other, but in our case, it's predominantly special education tuition costs. So when we look at these two pie charts, I think it's somewhat remarkable that the district spending pattern is very, very similar, almost an exact duplicate of the spending pattern across the state. It's important to think about the school districts as a whole. Education is a people-intensive business, and thereby 72% of our expenditures are dedicated to staff in the form of salaries and benefits. And you can see that on the pie chart when you combine the gray and red portions, the salary and benefit portion. So that's roughly 3/4 of the pie is dedicated to people. 13% is allocated to purchase services, including contracted services for student transportation, student food service, and our night custodial services. The next largest segment in the orange is for tuition payments for special education services. Next slide, please. How have expenses changed over time? You can see in this bar chart, and not to confuse you, but the colors are different here. Blue represents salaries and orange represents the benefits. In this bar chart, you can see that salaries have increased roughly 3% per year. Benefits have increased 2 to 5%. It varies year to year. These increases are due primarily to the increasing cost of health insurance for our employees. And overall, you can see when you look at the bar in total, that expenses do increase year over year consistently. Next slide, please. Another way to look at expenses is to look at it on a per student basis. And this is a very simple line chart with the green line representing over the last 5 years what the operating expense per pupil has been. And so just 5 years ago, we were at about $13,000 per student. And last year we finished at $14,000 per student. Next slide, please. When we look at that same metric compared to our peers, we can see that the rate of $14,000 per student for fiscal year 2020 is slightly above the average, but we are certainly not the highest nor the lowest. Next slide, please. What has been the overall enrollment trend? So while we were talking about students and cost per student, let's take a look at how student enrollment has been trending over time. We can see that yellow line at the top of the chart, that 10 years ago, we had about 4,100 students. And since then, enrollment has dropped by approximately 400 students to just under 3,700 kiddos last year. So this is an overall decline across this 10-year time period of about 10%. Next slide, please. This is another look at student enrollment. On this slide, the blue bar represents total enrollment, while the green line represents the percent of students from low-income families, and the blue line represents the percent of students that are English language learners. The low-income portion has grown from 23% 5 years ago to 27%, and the EL portion has grown from 14% to 17%. This change in the percentage of students in these subgroups can have an impact on the district budget, as often additional supports are necessary to meet the instructional needs of these students. Next slide, please. Next, we look at staffing. How has staffing levels trended over time? Staffing levels are driven by the number of students. This chart displays the full-time equivalency, the FTE count of teachers in the green bars, and that yellow or orange line, depending how you see it, at the top represents the student-teacher ratio and is noted on the axis on the right. The overall FTE count across this 5-year 10 period for teachers has been very level at about 180. And the ratio of students to staff has also remained very level at 20 to 21. Next slide, please. Before we close, I just want to comment on the other expenditure categories. So we took a closer look at student enrollment and staffing and salaries and benefits, which really represent the 75% of the budget. The other categories in aggregate sum to the balance, the remaining 25% of the budget. Purchase services are primarily for contracted services for night custodians, student transportation, and food service. Supplies include utility costs, electricity, natural gas, water, PPEs. It also includes some of our technology expenses. Software and tech devices are also classified in the supply category. Next slide, please. As we look to the future, what is on the horizon that might impact district finances? Next slide. This slide is divided into two categories. On the left-hand side, you can see those ideas on the horizon that might impact our funding sources. On the right-hand side, you can see those ideas on the horizon that might impact our expenditure needs. And so when we look, there are a number of uncertainties to consider. On the funding side, of course, property taxes represents the largest portion of our revenue at 60%. The Consumer Price Index, which caps the rate of increase for the property tax levy, was 1.4% for calendar year 2020. So that the 2021 levy, when it's filed in December, that increase will be capped at 1.4%, which is interesting to think about because the 3-year average, the 5-year average, and the 10-year average were all just under 2%. So you can consider that 1.4% is fairly significant decline compared to those averages. As far as state funding, this year and next year, as we commented earlier, the state has been unable to appropriate any new money for the EBF formula. When this happens, we don't receive that additional tier money. It's not built into our hold harmless in the following year, and we don't move closer to adequacy. Obviously, the economy within the state is very uncertain at this time. And of course, the state budget and appropriations for education are directly connected to the state economy. Given our hopeful recovery from COVID and the shutdown related to the pandemic, we hope that this is a very short time frame, but we really don't know. And so this is important to consider on a horizon. In the area of federal funding, we have received some increments for CARES Act funding. We have new information about the third ESSER 2 funding. We have that window is open for expenditures through 2023, and we're just having those conversations now about how we can best use those funds to meet the needs of our students. On the expenditure side, the impacts obviously related to COVID and the return to instruction, be it a full return or ongoing hybrid return. We're going to obviously continue to assess student needs and consider, is there unfinished learning and what supports do our students need? And then, as always, there can be legislative changes that trigger a new requirement of school districts that can have an associated cost. It may very well be an unfunded mandate that impacts the expenditure budget. So we closely monitor conversations and bills that are floated in Springfield in order to anticipate what impacts can be as we plan for the upcoming school year related to setting the budget. Next slide, please. And to summarize, the key takeaways from tonight's presentation regarding district finances are: number one, the district's in strong financial position as evidenced by the state's financial profile score and designation. We've learned that property tax represents 60% of the district's revenue. We know that 75% of our expenses are related to people. Education is a people-intensive business. Overall, our student enrollment is gradually declining, while certain subgroups are gradually increasing. And lastly, the final takeaway is that the impact of the budget challenges at the state level continue to create great uncertainty about the balance of this year, the balance of the budget for next year, and potentially the year after. I do have a slide in here with some links to some resources for those of you who are so interested. Thank you.